So in today's video, we're going to be talking all about how to become directly authorized as a mortgage broker. Being DA, which is the term you hear people refer to a lot, can be something that seems like the pinnacle of being a mortgage broker. You don't have to report to anybody. That's what it feels like anyway. These are all the things that we think. But today we are going to be joined by who is DA themselves. Before we go any further, my name is Ash Borland. I'm a mortgage broker coach helping people simplify success. And if you're new here, be sure to subscribe. Now, as I said, today we're going to be joined by a client of mine. The client who I'm talking about is Rob Thomas, the Swansea mortgage broker. Now, Rob is a client of mine, completely not that. So there we go. He is a client of mine and he has a very successful mortgage business. He's a systems and process beast. One of the things we nerd out together on is the systems and processes, which I think is required if you are trying to be a successful mortgage broker as a DA firm. But we'll hear from him into what he thinks about that. But I do think that he is in a unique position to share the ins and outs. So I've got a load of questions, all the questions that you want to know, and we're going to ask him right now. Rob, mate, welcome to the show.
Howdy, Ash. Thank you for the grand introduction, my friend.
No, very well deserved. I'm completely choking then on my own spit, so that's lovely. So, Rob, we're going to dive straight into today's questions because obviously I want to respect your time. I want to respect the viewers' time as well. But the whole idea of today and this video is to try and get a complete understanding of the most asked questions around going DA, because I think that many people find it pretty confusing, as I said in the intro. So my first question that I have for you is, what does it actually mean to be directly authorized as a mortgage broker? What is the actual meaning?
To be directly authorized by the broker means you've got a direct relationship with the regulator, quite simply. So there's no middleman, there's no barrier between you and the regulator obviously being the FCA. Ultimately, what it means to me as a business and you as a business, if you're looking to go down those tracks, is freedom.
Okay, and then the question that I have then off of the back of that, you say that it's the direct relationship with the regulator. How is that different then from a network? Because obviously people who listen, a lot of people are in here who are from networks, and we'll dive deeper into these, but there are people who are in networks. What is the key difference between that, would you say?
I'll give a bit of context. I used to be a network advisor with Quilter. I was with Quilter for many years. And as many of the people listening to this will know, when you're working with a network, you are subject to what their rules and regulations are. So you've got to go to them to find out what the score is. They're your boss, really. And they are the ones that have the relationship with the regulator directly. So you are party to that, really. If you're with if you're going direct to the regulator, it just means that you can set the tone for your business and how you want the business to be run. So if anything goes wrong, the responsibility is on you as a firm. However, I see it as a great opportunity to be able to build your business. You can do things the way you want to do them. You can follow the processes you want to follow. And you don't have that middleman to answer to, which can be seen as scary, I think, for a lot of networked advisors. I know myself, I was there for a long time. I'm in an hour in about 4 or 5 years before I decided to take the plunge. But once I did, I haven't looked back. I really haven't looked back. I've been directly authorized now for about 4 years. And it's been as refreshing as I thought it would have been. So that's the biggest soundbite I can give to it, really.
So my next question for you then on top of that is, how do you apply then? How does someone apply to be directly authorized as a mortgage broker with the FCA, the regulator themselves?
Many different ways you can do it. You can actually do it directly if you're brave enough to go down the old paper route and get knees deep in that process. But I think there are firms out there that help you do it. Myself, I used a firm called Simply Biz, who helped me to become directly authorized. So they actually go through the paperwork trail with you. So you have a appointed contact there. And they look to, it's almost like a broker for a broker, really. They're brokering you into becoming a directly authorized advisor. And by definition, then they try to make it simple for you, with the idea being that they're going to have your continued business then going forward in terms of being a compliance arm. And they charge you monthly then on annual plans then to do so once you're on board with them. So they say, we'll hold your hands to get you regulated. But after that 6 to 8 month process, it can be quite long before you get there. I don't know what it currently is, Ash, to be fair. But when I was doing it, I think it was about 11 months it took me from start to finish. And they just help you go through all of the paperwork as a solicitor would with the terminology, I suppose, is the best way of thinking of it. So
how would that be different to a network? Just, I know that many people who are listening to this and watching this will think, if you're with Simply Biz, and this is actually my own thing as well, I've always thought this, working with what is the difference between a let's say Simply Biz and say Stonebridge or Quilter? What I mean by that is you're saying you work with them, you're directly authorized, they'll do it for you, but surely they then, for what we understand and what I understand, they still are part of your business. So they still are alongside you once you're DA. So you're still with Simply Biz, aren't you, at this point?
Correct. I'm still with Simply Biz now. So how they work is they will be there as a compliance arm for the firm mainly. So they will offer things like mortgage clubs as well, mortgage clubs and insurance clubs. So they will give you more sort of incentivized rates to stay with them. So you can, by definition, when you're directly authorized, you don't actually have to be involved with any clubs. You can go out there and you can be a one-man band and you can do it yourself and conquer the world if you're brave enough to do. But the way that these firms are set up, they try to incentivize it by getting you involved with, like the Simply Biz Mortgage Club, for example. They will say, we'll give you more incentivized proc fees to join. So if I'm direct, for example, if I was to go with, say, Halifax might offer me 0.32% of a proc fee, whereas directly authorized with Simply Biz, for example, they could get me 0.35%. And it's these small increments that sort of build and build and build and build and obviously add up to thousands of pounds a year if you're doing high volumes of business. So that's the way they try to get you on board, really, and keep you there. And they do a really good job at it, to be fair, as well. But they also provide the compliance support that you may or may not feel you need, depending on whether you're a one-man band like ourselves. Say one-man band, we've got an admin team, strong admin team behind me, 2 workers. But if you're a bigger firm and you've got maybe your own compliance team on board internally, you may not feel the need to have such a strong presence as Simply Biz in the background. And you might use a firm like that to get on board and then go off and do your own thing once you've got your feet under the table and you're comfortable knowing what you're doing, because it's a slightly different landscape, really. I wouldn't say it's night and day compared to network advisors, but it depends how long you've been a network advisor for as well. If you've been doing it for 8 years, 10 years, you're familiar with the sort of framework as well.
So what I'm hearing you say there, from what I'm hearing anyway, is that it's a step below, not a step below, but like a step away from the networks, but it allows you more freedom, but still that accessibility to those better deals and all the things you get touted as a network positive, but you also get the freedom to run your own business in the way you want it to be.
Correct. And I think the main pull, really, and the main thing stopping people from becoming directly authorized is, I think a lot of firms would love to be directly authorized because they think they want to do things their own way and they don't want to be answerable to another firm. You almost feel like you're employed working for another firm in a sense when you're a networked advisor, because they case check your cases on a regular basis. They're always overarching and overhanging you and micromanaging you in a way. And a lot of people that are networked or mortgage advisors are doing so because they want to run their own business. Directly authorized allows you to run your own business. But the scary part of it for a lot of firms, and the thing that scares a lot of firms away, is that they don't want to leave the safety of the network. So if they were to get a complaint, they've got the complaints procedure. Quilter, for example, would have just been as liable for the complaint as I would have been with my firm. So it's a bit of a shared responsibility. Whereas when you're directly authorized, if you get a complaint, it's one-man job, really, and you're having to field that yourself. But I think a lot of it comes from the confidence in knowing what you do, how you run your business, and wanting to drive the business where you want to drive the business to. And I think that was key for me in making my decisions, and one of the best decisions I've ever made, definitely. 100%.
So the next question I have for you is, what are the costs in becoming directly authorized as a mortgage broker? This is something that I know a lot of brokers don't really understand. Then there's a lot of myths and rumors out there. So if someone wants to become directly authorized, what are those costs to actually pursue that?
Good question. And to be fair, I'm not too familiar what the setup costs are with becoming directly authorized at the moment. I know I can give you the ongoing costs, for example, with the FCA. So you've got costs with the FCA that you've got to pay annually. They get revised annually as well. So you've got the FCA costs, you've got the ombudsman costs as well that you've got to pay. And I know the FCA costs, I've just had my bill now, is 1,800 quid. And I had to pay for the size of the firm as well. And the ombudsman costs are about 150 quid as well. So it's near enough $2,000 you've got to pay. No, annually. That's annually, sorry. So $2,000 you pay annually to be able to be qualified to give advice. Then you've got the ongoing costs for Simply Biz. For example, if you're going to stay with that, I pay about £253 a month. So that's got to be about £3,000 a month you pay in there as ongoing costs. But these are all things I factored in before I joined, to be honest, Ash. And I think it's important that any advisor listening does that as well. I did a quick exercise based upon the proc fees I was getting with Quilter for my mortgages and my commissions, the cut they were taking from me, If anyone's good with spreadsheets, I know obviously
You are.
we completely nerd out with spreadsheets, that sort of thing. But I did all this to the nth degree. So I could say, this is how much I'm paying Quilter every year. And it was tens of thousands of pounds, because as guys, they take 10, 20, 30%. I think it was about 30% I was paying away just for them being in the background and nagging me every couple of months and getting me on board with things, which I didn't like, really. I'm a man who likes to be left alone to do my own business and to sort of overarch and manage my own business, which I'm always looking at on a day-to-day basis to make better. And it didn't suit me very well. So I thought, once I'd compared the costs, actually what I worked out was that you were actually saving, I was saving thousands of pounds by making the switch as well. So the upfront costs, I don't know whether I'm wrong on this one now, but it's about £2,000 potentially I paid to have that switch. And you pay reduced costs with Simply Biz whilst you're getting on board as well, when I was doing it. So it wasn't $250 a month whilst you were getting regulated as a direct firm. But yeah, that's pretty much how it worked. And whilst you're actually, I don't know whether you want me to go into this too much now, Ash, but
You can do as much as you want.
If I just want to expand on it a little bit. So the process, as I said, it can be a 12-month process. And you've got this window from when you say, yes, I'm going to be making the change and I'm going to be moving, to I am now this new directly authorized firm. And some of the key things that you might need to work out as an advisor is, are you going to need to break away from the current firm you're working with and set up a new trading name and a new firm? If you're looking to do that, it can actually be easier for you if you're going to do it that way, because there's a bit of a separation between the firms. But if you're looking to keep the same firm name, I'll explain a little bit more now. If you're keeping the same firm name, the network is going to shut off your commissions at some stage. They're going to put your pipeline on freeze, as they call it. So as soon as you say, I want to leave the network, which I don't recommend obviously you do until you get to the authorization stage with the FCA, but as soon as you were to say you want to leave, they will freeze your pipeline, which means no commissions for X amount of time. I think it was about 6 months I didn't see any commissions before I got that lump sum where they said goodbye. But that's a huge consideration for some firms, especially the firms that live in maybe month to month, newer firms that have maybe not been around the block for that long, but want to make the change quickly from a network advisor to a directly authorized firm. So you've got to be careful and plan these things out carefully, I'd suggest.
So what are the FCA compliance requirements for directly authorized mortgage brokers? What specifically do you have to do? And now that as the DA firm?
Yeah. So you've got to go through the whole application process, which is a hell of a lot of paperwork and a hell of a lot of questions. Even if you're going to be getting support from someone like Simply Biz to actually do the process for you, it's a hell of a lot of questions they fire your way that they've still got to ask you in order to complete their forms. And a lot of it is based around, have you had any complaints before? Have you ever been banned from using any lender, particularly taken off their panel? And they run the rule over things like that as well. And they want to make sure that you've had your case checks and they've been in order for the last 12 months. And you've got to maintain X amount of money in your bank account as well as, I can't remember the name of it now. It's £10,000. It's either £5,000 or £10,000 you've got to maintain in there, almost like a slush fund.
I think it's 5, or it might be. I've heard it's definitely one of those two figures.
Depends on the size of the firm. For us, we're close to 10 now, but it is still under 5. But as long as you've got that £5,000 there, then that's the minimum sort of cash requirement you've got to be able to evidence in a bank account before they flick the switch on for you, basically.
And so how long does it take to get directly authorized? So as a mortgage broker, so you said there's a 12-month period has to be done.
Months.
Is it 12 months from when you put it in, or can it be done faster?
Yes, it can be done faster, but you are relying on the regulator then to do it fast for you. So it's all down to the timescales with the FCA, ultimately, Ash. When I was doing it, they tend to quote you. They did underquote us slightly. They said it was going to be about 8 months when we were speaking to Simply Biz because they were managing it for us. It turned out to be 13 months, I think, in the end, before we got there. So just be aware that you're going to have a relatively long wait to get there. But the important thing in your mind is making sure it's the right decision as the brokerage. Once you've made that decision, it's almost like buying a house. You make the decision to buy the house. You wait 4 months later before you're in the property. But it's the same with the firm. You make the decision to do it, and then you go through the uncomfortable paperwork process, and you just keep your eye on the prize until you get to where you need to be. But it is 12 to 13 months before you actually get there. You can continue to give advice under your network. They won't stop you from giving advice. What they will do is freeze your pipeline, so it means you won't be able to access the funds. But it's a bit like putting it in a savings account. You'll just get it and be able to draw down on it then once you reach that 13-month period. It's probably going to be 15 months before you see that money. Because you'd have to wait for the new firm to start before they will sign off on final checks, as they call them, and get that money across to you. But you will get there, and you'll be able to close that process off and start your new world under the new firm.
So it sounds like it's something that you absolutely need to be very adamant that you're going to do it. It's a long-term commitment. It's not something that you can just go straight in and be like, let's just try this because this sounds good.
No, absolutely. Do not do that, guys. You want to be making sure that you do your diligence on it, really. You need to make sure that the figures work out depending on the size of the firm. Generally, the bigger the firm, the more turnover you're getting as a firm, the more you're going to benefit from being a directly authorized advisor. And also, don't just do it from a monetary perspective. Do it from a control perspective as well, making sure that you are looking after your firm and where you want to take the firm. Just think of where you want the firm to be in 5 years' time. Do you still want to be answerable to a network, or do you want to perhaps start to tailor your processes and make your life easier as an advisor on a day-to-day basis, which is the biggest takeaway I've taken from it really since I've started. I'm doing a lot more things now that I couldn't do under the networked environment, a lot of things.
Which leads me actually on to the next question, which is an interesting one. So from a qualification perspective, the question that's been asked here is, what qualifications do I need to become directly authorized as a broker? Now, my question to you, is it very similar to, is it just the CMAP or CMAP equivalent, or do you need those other enhanced qualifications in order for the FCA to see that as more of a favorable thing?
No, you really don't. You really don't. So anything supplementary to that is obviously good for you as a business, but it's not a prerequisite for the regulator. So it's literally just CMAP. So if you were to get your CMAP in place, they don't say you've got to be doing it for 2-3 years. You've got to have competent advisor status as well within a firm, just to show that obviously you've been doing it. But as far as I'm aware, there's no minimum requirements of experience that you need in order to become directly authorized. But just like when you're submitting a mortgage application to somebody, it will land on an underwriter's desk, so to speak, or a caseworker's desk. And you will get assigned a caseworker with the FCA who will go through it with a fine-tooth comb, and they will come back and ask you questions. So, for example, if you hadn't been doing it that long, they could come back and say, what's your reasoning for wanting to do this? And why do you feel this will be a stable venture for you? For example, you've only been doing it for 1.5 years, 2 years. It's a relatively short period of time. Why do you want to do this now rather than stay with a network a couple more years, get a bit more experience? But I've known firms that have done it, and they've got signed off as well by the FCA after 2 years. So it's not something that can't be done. I wouldn't discourage people from doing it either, really, as long as
I have seen people, clients of mine in the past, I have seen them have brutal interviews with the regulator when they were trying to sign off.
I was lucky. I was really lucky. I was really lucky because I don't know whether it was the way that Simply Biz actually prepped the case and managed to get it through in a nice, tidy manner. But they did come back with a couple of initial questions, and they did want to go back. This is the bit that made me itch on every inch of my body when they did this. They wanted to go to the network, and they wanted to go for a reference, because they always do, guys. Always. So I was always worrying about that from day one, because they go for the reference before they've actually said you're going to be authorized. So there's a fight. It's like chicken and egg, really. Reference before you hand in your notice, or notice before you get the reference. And they do tell you need to put your notice in before you go for your reference, because your notice may be stage 3. The reference is stage 4. Might not be stage 3 and stage 4, but you see the sequence that it goes in, basically. And I was, okay, hang on a second. If I put my notice in with a network and you guys, the FCA, say we're not willing to do that for you, I'm a little bit stumped, really, aren't I? At best, I look stupid. And I'm having to go back to my network and say, oops-a-daisy, I've changed my mind and I want to come back. Pleading, but thankfully it didn't work out that way, and I think they're mindful of it as well. My caseworker actually said that just like you do with a mortgage application and not paying for a valuation to be done sometimes on a property, I want to make sure that everything else is agreed before we pay any money that we're not going to get back. That was my approach with the authorization process as well. And the caseworker I had was really good, and she was willing to do that for me as well. It wasn't the way they typically did it, but I did push on it and did try to sweet talk her a little bit into doing that, which worked quite well. So I was quite pleased that we managed to do that.
What are and we spoke a little bit about it earlier, but I'd love to do a little bit of a deeper dive into this, which are the pros and cons of directly authorized versus being an AR, being an appointed representative as a broker. Because I think this is, people who are watching this, there'll be different types of people who watch this. There'll be people who are watching this who are coming into the industry right now. Common kind of people who listen to my show is that watch this channel is getting into it, getting their CMAP and trying to look at the career path. 100% knowing you, that would be the type of thing you would do, where you'd want to know the ins and outs of everything before you even started. But there are other
Twice, yeah.
people. I know you too well at this point. There are other people though who are good writers and good, like they've got solid businesses, admin, back stuff, the whole thing, multiple six figures, all this type of stuff. And they are weighing up the pros and cons, truthfully. Now, from your perspective, you've been on both sides of the table. What's your pros and cons for both?
I've touched on the main ones already, but I'll go back on them and just dial in a little bit more on them. So the financials, quite simply, if a firm's already well set up in terms of how they run their business, they've got the admin support, they've got maybe several advisors underneath them and they're doing it, you've got to ask yourself the question, why are you still using a network? And generally, the answer that I come back with from other brokers I speak to is because they like the support of knowing that they're not answerable to. They like having someone to share some of the blame with if something goes wrong. But I'd say that's a reasonable proportion of people. But otherwise, I'd say that these same people are paying 30, 40, 50,000 pounds sometimes of their money out to a network, for example, a quilter, every year, that could be in their pocket. And they're not going to see all that 30, 40, 50 necessarily, because they'll have maybe some increased costs par for par if they're comparing the network to being directly authorized. It might be a couple of grand out, for example, but a huge proportion of that they're going to be seeing back in their business that they can reinvest in. They can repurpose the money, as we were talking about before this video, actually, Ash, with some of the things you were saying about repurposing the way you run your business and the way I do my business. It's actually moving the money sideways. So you're not actually saying, well, hey, I've got an extra 20 grand to go on holiday with, which would be great, or a couple of holidays. It's actually moving it sideways and putting it into things that can make your business greater, stronger, reputation, systems in place. Yeah, and it's just about building things out. So number one, it would be the financials. Number two, it would be, which is arguably more important to me actually, is the control I have over my business. They work hand in hand, of course, but the control you have over your business is going to determine where you end up in a year, 5 years, 10 years. And if you're stuck with a network, I always see it a little bit like you got handcuffs on. The networks, I don't know whether they still work this way, but a lot of them don't accept electronic signatures, for example. So they'll have you sign authorities or get clients to sign authorities to proceed. That was what Quilter used to do. And you'd have to get handwritten signatures on every document, which was the bane of my life. Because I'd have a mortgage ready to go, and mortgage rates change every couple of days. And if you've not got that authority to proceed document signed because they can't get near a printer, and photos aren't great either, they need to get them scanned across, and it's got to be good clarity as well, then until you've actually got that, you're talking about delaying a mortgage application for 1-2 weeks, which is obviously crap for your pipeline in terms of getting the business written, because we all want to get our business written and move on to the next cases in terms of building things up for our own reasons and focusing on our clients. It's just so restrictive, and they're just very anal about how they do it. So they won't give you that flexibility to do that. And you need to follow their processes in terms of how they work, do things when they say how to do them. And it's just very restrictive. It's like trying to work with one arm tied behind your back. I felt anyway. I'm not sure everyone feels like that, but I think a high proportion of advisors do, especially mortgage advisors nowadays, because they still deal with wealth, as a lot of you will know. And I think for wealth advisors, they're tending to focus a lot more on wealth nowadays as well. I don't know whether other networks work that way, but Quilter certainly do.
Quilter are, and I was part of Quilter, and I dread the dreaded ATP, as you just said then. I remember the authority to proceed, and it was
terrible, absolutely
it was a terrible thing. I don't think many networks now do. A lot of them do digital, and they're pretty forward thinking. But Quilter, when I was there, in a similar time, it was Intrinsic when I was there. It wasn't called Quilter. And
so same here. They changed the Quilter back in, I think, 2016. I think rebranded.
Yeah, it was when I was there. It was Quilter. It was Intrinsic, and I remember the Quilter acquisition happening, and then all that kind of thing happening, and they're saying it's going to come soon. It never came while I was there.
It was a huge shift, if you remember, Ash, from wealth from mortgages to wealth. Really, you've seen a massive shift in the background to where they were pushing a lot of advisors out at the time as well.
Yeah, they were big time. So, I know what you mean. So, what would be some of the cons then? Would you say for being DA? Like, obviously you're DA, what are the things that you find are a little bit more of hurdles? You're like obviously the pros, but what are some of the negative sides to it?
You've got to make sure you're on your game. You've got to make sure. What I mean by that is, if you don't like paperwork in a sense, that will be maybe a bit of a factor for you being directly authorized, because they do require you to be on top of your stuff. Now, a lot of this is driven by the mortgage club, as they call them, you're with. So Simply Biz would be a mortgage club, not a network. And the mortgage clubs are the ones that offer you the incentives on the deals, and they're the ones that say, If you pay X amount, you can do an annual checkup with us just to make sure that you're on track. And they will say they give you a document with about 40 things on there that you need to do. The first year for me was pretty tough, really, in a sense, because they ask you to do a lot of things. They need you to make sure that you're staying on top of things like anti-money laundering policies, data security policies. You've got to have a policy for everything in your life, guys, literally everything, just to make sure that everything is adhered to. So if the regulator comes knocking on your door and they ask to see XYZ policy, you've got it on file and you've got to update them annually as well. So they've got little checkboxes that you can do that with. And just trying to get the sort of new structure under my belt took a relatively significant amount of time in the first year to get used to, that I didn't used to have with Quilter, because Quilter used to tell you need to do this, that, and the other now, and you just used to get on with it. You are left alone to do it on your own. You don't actually have to do it, but obviously if you didn't do it, you're going to get into a lot of trouble then when the regulator comes and you don't have the policies on hand. So no one's going to be there saying, you've got to do this. You're going to be a bit like running your own business, where you're answerable to yourself, and you've got to make sure that you're staying on top of everything. So that can be really difficult. Depends on your personality, which again would be a big factor in deciding whether you want to make the move or not, which is why I say don't rely on the finances alone.
Leads me on to my next question, which I think is the one that many people will be thinking of this one. And it's one actually I have my own genuine author. The interesting thing about this interview is I've worked with you for quite a while now, and I've worked with a lot of DA firms, but I don't know much about DA. It's the one thing, like I've been in corporate, I've worked in like hybrid roles, I've worked in multiple networks, I've been an AR, I've been whatever the other one was. I've worked in new build, I've done all these different things, but DA is the one where people ask me DA questions and I'm like, I have no idea. Like I vaguely understand it, but not to the same extent, which is why this is very interesting for me as well. This question is, do mortgage brokers need a compliance consultant to be directly authorized? So do you have to because this is something that I know a lot of people have compliance officers. Every firm, if I think about the 5 clients or 4 clients I have that are DA, I don't know if you do, but I know that two of them for definite have in-house compliance consultants.
I do. It's literally me.
Yeah.
So as a one-man band, you've got to wear all your hats, really, haven't you? But you don't actually have to have a separate person that actually does the compliance for you. But they do ask you to name a person who's responsible for compliance. If you're a one-man band like ourselves, I'm not going to put that on one of my admin people, although I could. I just decide to centrally manage it myself. So you've got to have a compliance officer, a named compliance officer that's responsible. Same for consumer duty now as well. So it's all relevant, and you need to have that named contact there, but it doesn't actually have to be a separate person. No.
Makes sense. Which then brings me on to we've touched on this one already, but I just want to check if there's anything else on top of this, which is, are there what financial resources are required to become directly authorized as a broker? So we've spoke about this idea that you need about £5,000 to £10,000 in an account at any given time that needs to just be there. But is there any other financial resources that are required? And I would add on to this, less about required and more so, from your experience, advised. So like from your own experience, because sometimes it's not necessary. We know with insurance, it's not required to have insurance. Yeah, but it is. So what is advised?
That's correct. No, there's not really. So in terms of what's needed, you don't need to have any extra money. But I don't know about you, Ash, if you're having to look over your shoulder and you've got, let's just say you need $5,000 in the account, which will be the case for the majority of people listening to this video. I hope this wouldn't be the case, obviously, because their business is obviously not going to be in business for much longer. But if they only had £6,000 or £7,000 in their account on a regular basis all the time, then you don't want to be looking over your shoulder with £1,000 to £2,000 buffer in that account, because you need to maintain that £5,000 at all times. It's not making sure that £5,000 is there on the 31st of January or the 1st of April or the 1st of January. It's at all times. So if at any point they wanted to check those accounts and it wasn't there, you'd be in big trouble. So it just needs to be maintained. It doesn't physically have to be in a named account, but you need to make sure you've got within the business, whether that's over 1 account or 4 accounts, at least £5,000 there, or more, depending on the size of the business, because it scales the bigger you get as a business with your turnover.
That just shows then the importance of that. It's so important to have that amount of money there. It's not like something you can just throw to the side.
No, absolutely not. It's not like your life insurance where if you want to take it, you take it. If you don't want to take it, you don't take it. It's more like a buildings and contents insurance where it's mandatory, or your buildings insurance where it's mandatory. It's probably a good paradigm, a good way of thinking of it, really. Needs to be there. Have it there. Forget about it. Forget it even exists. You're not going to see that money until you decide to finish as a firm, basically, because it always needs to sit in the account. So, yeah. Earning you no interest as well, by the way.
This leads me on to the final question I have for you, and obviously we'll ask you to add anything else in at the end if you have anything to add. Yeah. But this is a question that I'm actually genuinely interested in this one. I've had clients of mine who have applied. So the question is, what happens if my application for directly authorization is rejected? I've had one client where it has been rejected, interestingly, and I'd love to hear, and obviously yours wasn't, but I'd love to know what you know about what that next step is. You alluded to a little bit earlier where you said like this, the issue of
having to go back,
having to go back. That specific thing happened to my client that I work with.
Oh, wow.
So it was an interesting, and they said that the person had not worked in the industry long enough, that they thought it was not long enough and the experience was not long enough, and that the business plan wasn't as robust, and it was a pretty harsh rejection. From your experience, what happens after that usually would happen?
Again, based on what you said there, it's very subjective. I think I mentioned it earlier as well, that it's up to the underwriter or the caseworker in this case to determine that for that given firm on that given circumstance. If they feel there's too much risk involved, they will decline it and they'll pass you back to the network. Hopefully with the other firm you were working with, Ash, they didn't actually get to the stage where they'd given in their notice. Was that the case?
So they'd given their notice in, but they were a very high writer. And when they came back with their hands out, they were, the network were pretty welcoming back. They were like, oh no, not of shame. And actually then, silver lining, the network actually was even more attentive to them because they were like, wow, they nearly lost this person, because they write a lot of business. So they were like, we're going to give you everything. And then
the way these things work out sometimes. It's actually worked out quite well for him, really. So obviously he wanted to become a directly authorized firm. But yeah, I guess he's planning on going back to that in the future.
I can imagine they will be. Yeah, obviously the plan is, but I think the plan is, it was a couple of years ago now. They still haven't done it. They're still deciding on where to go. But it's an interesting one because everybody I'd met, it was the first client I'd had gone through who was actually applying, and then it was like a big fat no. They did use a what's the word, like what Simply Biz is, like a packager. They did use somebody. It still didn't work out, but
like an intermediary, really.
Yeah, they did use that, but it still didn't.
By the way, a lot of these firms will set themselves up as we'll hold your hand to get you on board, in the hope that you'll stay with them longer term. So by doing that, they'll think that you helped us get on board. You got us through that sticky patch. They won't necessarily charge you a fee to do that as well. Some firms will. I think I alluded to £1,000 to £2,000 earlier. Some firms will say, actually, we'll just charge you an ongoing monthly payment whilst we look to get you on board. We won't actually charge you a fee per se, but you will be subject to a 12-month contract minimum when you actually become directly authorized, and we can start working together. So it'd be worth looking into that as well. But
so I'm guessing then the rejection question, then, from what I understand, what we were saying is, and tell me if I'm wrong here, if you get rejected, you can reapply. That's fine. From my experience, you can reapply.
Yeah, that's right.
But you do run that risk of you have to have potentially given your notice in. It's not a pleasant experience, and it could be quite costly.
No, it's not. As a business, you're going to be burning your bridges when you go from a network to directly authorized. They don't like it. Obviously, you're going to be saying goodbye to them. So to have to go back, it's going to put you in a potentially sticky situation. I don't know too much about the decline process, but I would suggest that if I was in that position, I was thinking of this whilst I was going through the whole thing, hedging my bets, really. And I thought, if they do come back and they were to decline it for any reason, what would I say? And I thought, I probably wouldn't go back to the same network I was with in the first place. I'd been with the same network for about 8 years, I think, roughly 6 to 8 years. And I just thought I'd only ever been with the one network as well. So I would have probably scoured around and searched for a better case scenario, because I wasn't really happy with Quilter at the time, let alone being with a network. So I know grass is always green and that sort of thing, but seeing as you're having to go back anyway and start afresh for 1 year, 2 years, 3 years, I was going to take a completely different look at it. But there's no reason why you can't go back to the regulator, the FCA, and reapply in the future. They don't say you can't reapply for 3 months, 6 months, 12 months, but it would make sense that you would give it some time based upon their feedback before you went back in. So if they said you didn't have enough experience, I'd probably get a bit of narrative off them to say how long they would want to see in this case. If they said a year, just do exactly what they tell you, because chances are it will land back on their desk again at that given stage, and you want to make sure that everything's dialed in correctly for the next winner. Make sure the second time's the winner for you, basically.
Definitely, yeah. It sounds
But a
like
lot of firms, just want to add to that, sorry,
yeah.
Ash, a lot of firms that I've spoken to have successfully managed to do it. There aren't too many. I'd probably say it's about 8 out of 10 people that managed to do it. So I wouldn't say it's not Everest by any means.
No, it was the first time I'd seen someone rejected, and it did make sense when the feedback came in. I did understand when I read the feedback, I was like, okay, yeah, I get that. And it wasn't me who was advising them to do it. It was something separate to me. But when I got the feedback, they were like, "What do you think?" And I was like, "Yeah, I understand." And I think my takeaway to people to watch this and people listening to this specific thing is, I took from that was, if you're going to do it, it's that measure twice, cut once concept. Is if you're going to go DA, and I do think from my perspective, having worked in the industry, and it'd be interesting to hear your take on this before we wrap this up, is that I have seen it's like layers to stuff. So a lot of times you come in either in an employed role or you come in self-employed, but you're really cutting your teeth at the beginning. You work under a firm, you get your roots, you go over, you move from that firm, you potentially go as like under a network on your own. You learn that, and DA very much is the pinnacle of if you truly want to take it to the nth degree, DA is where you do that. And I think sometimes within this specific person's case, who again, I'm very close to them and they're great, but they were trying to leapfrog over. They were very good. They were a good salesperson, but not so much in the business sense. They were trying to leapfrog over to all the other steps, and I think that that was the feedback that the FCA said was like, you don't know really what you're doing. You're a very good salesperson, but outside of that, you're a big risk. And I think that's it's a really good point.
It's a really good point. And if it's not been clear from what we've said so far, really, there are multiple different things you need to make this work. Having someone like a network involved is almost like having a shareholder in your business, in a sense, because they will, depending on how proactive the network is, they will try to centrally manage things for you. I know some networks, they'll be really hands-on and they'll be trying to have business meetings with you all the time, checking how your business levels are going, etc. Quilter weren't like that with us, really. They relatively left us alone, but the things they wouldn't leave us alone on were big things for me in terms of how we run our business, which is why it was key. But I very much wanted to manage every element of my business, from the advertising to the compliance, to the way that we deal with clients and the process we deal with them. We just felt there were slicker ways to do it that would be not an issue to the regulator. And that was backed up with what I put in the narrative to when I applied as well. So don't make any rush decisions as a firm, would be my advice. Don't make any rush decisions based upon finances alone, and just make sure that every element of your business, as far as you're concerned, is covered off with how you're stacked. Do you have admin support internally? Do you have any compliance support internally, or someone that handles compliance? Are you happy? Do you have enough time to do it yourself? And if you do, then great, go for it, because you'll absolutely fly with it if you're going to manage it that way. But if you just see it as a get-rich-quick scheme, then you're probably going to end up with headaches over the amount of paperwork you initially have to get your head around. I actually had to build in processes into the business to handle most of the admin tasks I do now. So every month I get drip-fed tasks to do. I'll just get a little reminder on my desktop just to say you've got to do X, Y, and Z. So it's easier for me. It's almost like my automated system now is like Quilter were before, reminding me I need to do things. If I didn't have that, I could easily be in a situation where 12 months from now, focused on just writing business, and I'll be in a hell of a lot of trouble then when it comes to making sure all of my documents are in place, which is going to be a headache for anybody. Nobody likes doing it. Shall I also touch, Ash, before we finish, on reporting? We've not actually touched on the regulator. And
I was going to say, what else would you like to add? So please do. This is your section to add what you would like.
Good. So this is a big one. You've probably all heard of Gabriel reports in the past, or maybe not if you're fairly new to the industry. They're known as reg data reports now. They're reports that you have to update the regulator with quarterly now. It used to be twice a year, but it's gone to quarterly now that you've got to update them directly on the FCA's portal. The facts and figures on that system are pretty complex. So what clubs will offer you is they'll say, for X amount of money, we'll help you to complete those. If you want to go down that route, absolutely fine. But there's a firm out there that we use, so I'm going to give them a little shout out now, called My Reg Data. They're really good. I pay about £300, £350, I think, a year for them, which isn't necessarily cheap, but it does cut a lot of corners with the paperwork that would certainly give me headaches, and I'm dealing with facts and figures every day. What it means is that you actually fill in your bank accounts like you would with a QuickBooks or something like that. So you're actually filling in your income and your outgoings each month. So he asks you to do that. But then when it comes time to reporting, I'll have a meeting with him twice a year still, because he can drip feed the rest of them through for the quarters. And it takes us about 15 minutes to actually get it done. 15 minutes. So it's half an hour a year, roughly, for my reporting to the regulator that would probably take me 8 to 16 hours otherwise if I wasn't doing any of the prep work and using the firm. So there are quick shortcuts you can have as well to making that work, but you do have to report to the regulator, which you don't have to do with a network. So it's another bit of a time you're not going to get back, really, in a sense. But it certainly wouldn't be something that would put me off becoming directly authorized if that was the one you're umming and ahhing on. I would just recommend that you just take the plunge and you just get on with doing the paperwork afterwards, because there are firms out there that can make it easier for you to process those parts of the process. And that, Ash, my friend, is pretty much that, really, with regards to my thoughts on it. I think just to summarize, don't be afraid of looking into it, at least, because I had a couple of meetings with Simply Biz, and they were pretty forthcoming in what they tell you. Obviously, they promise you the world with certain things, certain firms do, but they were pretty good with what they said to me. I've not had any exposure with any other firms or mortgage clubs to date, but they were good for what we needed them for at the time.
So there you have it. That is a deep dive into how to become directly authorized as a mortgage broker. Rob there has shed a load of light on that. If there's any other questions you would like, please do leave them in the comments. We'll try and make another video on it, whether me or whether we get Rob to do one with us. We will do that for you. And if you are thinking about wanting to generate leads, grow your mortgage business, check out this video here. This video here is all about exactly that. It's how you do the authority formula, how to generate leads through social media and then convert those leads through becoming the top authority in your space. Check it out right now. It's definitely one you don't want to miss.